Hi, and welcome back to our edition of Technically Speaking. My name is Violeta Todorova, and I'm Senior Market Analyst at Legacy FX. On Saturday, the US and its allies vowed to remove major Russian banks from the SWIFT interbank messaging network, effectively cutting them off from the global financial network. Tensions between Russia and the West escalated further on Sunday after President Vladimir Putin put Russia's nuclear forces on high alert in response to the stinging new sanctions and what he called aggressive statements by NATO. Equity markets ended sharply high on Friday on hopes of peaceful resolution of the conflict. However, such hopes appear dim after the weekend. European equity markets and US futures plunged on Monday, while crude oil rebounded sharply to $99. Ukraine war, surging inflation, and wild price swings across asset classes last week set markets in a fragile state this week. US President Joe Biden is set to deliver one of the most important addresses to the nation in recent memory. With inflation at 40-year high, Russia-Ukraine conflict escalation, and COVID-19 pandemic lingering. With rising sanctions against Russia and market volatility remaining at elevated levels, testimony on the economy, monetary policy by Fed Chair Jerome Powell this week will need to reassure investors that the Fed will take steps to curb soaring inflation as the economic outlook becomes increasingly uncertain. The economic calendar is jam-packed this week. Powell is due to testify before the House Committee on Financial Services on Wednesday, and again before the Senate Banking Committee on Thursday. The Fed clearly indicated that it's likely to raise rates at its March meeting, but now Fed officials may weigh the geopolitical conflict in Ukraine against more aggressive attempt to contain inflation. On Wednesday, the payroll processor ADP is due to release figures on private sector hiring, and Labor Department is to publish the weekly report on initial jobless claims on Thursday. On Friday, market economists expect the non-farm payroll report for February to show 450,000 new jobs, the unemployment rate to decline to 3.9%, and the average hourly earnings are estimated to rise 0.5% on the month. Eurozone CPI data will be released on Wednesday, with economists expecting inflation to rise to a new record high of 5.3%. The meeting of the Organization of the Petroleum Exporting Countries on Wednesday will prove a key event as crude and Brent prices are sharply high on Monday off the back of new sanctions imposed to Russia on the weekend. Equity markets were hard hit last week, with all three US benchmarks and all major European indices except the FTSE below their respective key support levels, confirming bear market trends are now in place. The Nasdaq and the DAX 40 have been the worst performing. Record high valuations, slowing economic growth, and money supply, which could stall even further amid global tightening weighs on market sentiment. Given the current geopolitical situation and the fundamental backdrop, we see global equities vulnerable to further 5% decline from here. Relief rallies along the way are likely, but overall markets are in a fragile state. Thank you very much for watching. Hope to see you next time.